still quite optimistic on Asia in general. The key issues for me are that the country and sector opportunities are maybe less than they have been over the last couple of years, and I'm preferring to look for the opportunities that are perhaps the next level down. For example, within ASEAN, some of the mid-cap stocks that have been trading at a half or even a quarter of the valuations of the large-cap stocks are what are interesting me. They have the same opportunity set, but don't have the same crowded and expensive valuations that the market has looked for. I guess looking further afield, I tend to think about the opportunity set in terms of scenarios. For example, China and India have been having issues around politics and people's perception on policy. Now, if that was to change, we could see those markets do quite well, and the ASEAN markets do relatively poorly. However, if some of those issues are perceived to continue, then we could see more of the valuations become even more extended in ASEAN. By the same token, people are getting a bit more optimistic around developed markets at the moment, and as a result, you may see some of the exporters doing better going forward. And I think, given how important policy is at the moment, it's important to stay open-minded to each of those scenarios and how you'd be positioned if each of those came to fruition. If we look at markets around the world, people are concerned about growth, they're concerned about debt, they're concerned about the impact of commodity prices going down in some markets. If we look at Asia, none of these are existent. Growth is driven structurally by increasing productivity. That will not end. They have been relatively low debt given the experiences in the Asian financial crisis. And commodity prices coming off, unlike other markets, is actually beneficial for margins in Asia. The slowdowns that we've seen in some of the markets that people have talked about with China has now happened. The inventory correction has passed through, and we're starting to see the benefits of these economies turning from pure manufacturing to more consumption-led economies. I think people tend to think about Asia from a lot of negative perspectives. You hear things like corporate governance issues, etc. And in my time in Asia, which is 13 years now, so quite a long time, I've actually seen that these are issues, there is no doubt, but they've continued to improve. However, people do need to be aware that politics matter. This is not one country, it is several. You need to understand the ramifications of that. There are still quite complex ownership structures around companies. Understanding the impacts of that are also quite important. And probably lastly is just understanding that regulations, like in many countries, are a bit different, and it's important to understand that because you may get caught in some value traps if you do not understand the regulations well. I think what really differentiates BlackRock, in my view, compared to other companies where I've worked, is the risk tools that are available for the fund managers. This is something which you can choose to use, and if you do, I think can help you understand the risks in your portfolio a lot better. A lot of people tend to talk about tracking errors or betas or how much you own in a stock, but being able to take it to that higher level of sophistication and understanding what exposures you have to volatility, what would happen if the yield curve in the US steepened, because obviously all stocks have degrees of correlation, and this is something that's not widely understood by the market, but is very, very important to understanding the downside in your portfolio, and I think that is something that differentiates BlackRock. For me, what I try to do is be very pragmatic, opportunistic, and very disciplined in what I do. And I think these are key things. A lot of people tend to make the same mistakes over and over again in investing. People tend to buy at the highs of markets and sell the lows. That's the reality. I think by taking that sort of mistake or that behavioural error that people make, and realise that we're all capable of making that, then you can start to look for the things that really matter. And that's what I think makes a difference in my investment style.